Very good afternoon, everyone. Welcome to yet another uLaw webinar. In today's topic, we're going to be discussing the trust and gender reconciliation, the steps that you have to take as a legal professional in Canada in managing your trust and general account. Not only do you manage your dockets, your matters, and position the money in and money out across these accounts, the Law Society obviously has its compliance rules that governs the bylaws that actually needs you to reconcile your accounts, both trust and general. Again, if you only have general, then that's all you have to focus on. But especially if you have your trust account, it's very important that you reconcile at a minimum once a month. And it's a big part of your process of all the documents that you need to collate to stay compliant and be audit ready whenever you're being audited for. So we're going to really look at what trust and general reconciliation looks like, try and demystify, this one big task that you're required to accomplish, and try and see if this can be made simpler from the age-old trust and general reconciliation that legal professionals have been doing over the past few decades. Okay. Today's webinar actually has been accredited by New Brunswick, the province of New Brunswick, for 1 hour of CPD credits. We're yet to get approval from Ontario. We hope we should have that soon, but it's not accredited in Ontario. But for friends who are joining us today from New Brunswick, this webinar is accredited for 1 hour of CPD credits. And I kindly request you to mute your phone lines and use the chat window to ask any questions that you may have. Our support staff will be available and we'll be more than happy to answer those questions as we receive them. And as a feedback that we received from the last time that we made this presentation, we want to focus lesser on the slides and then take more examples using uLaw as an example to walk through what that reconciliation process looks like. Okay? Like any other uLaw webinar, today's webinar has an agenda as well, and the agenda is pretty straightforward and simple. What is the reconciliation process? Okay, so we're going to spend some time just looking at what the reconciliation process looks like. How do you accomplish or go about doing your trust and gender reconciliation? We'll talk about, what does it take for you to be audit ready? So once you've done the reconciliation, what are all those compliance documents? What are those ledgers and journals and other documents that you need to keep ready and present to auditors as part of your compliance? And we'll go through that checklist, kind of be prepared with that compliance checklist, if you will. Always have that handy to be audit ready at any given day. And we'll kind of quickly highlight what are the core components or aspects of an audit ready financial management process look like. Okay? And as I said, we'll run through these slides so that I can set some context about what these different agenda items look like, and we'll jump into a demonstration. Again, uLaw is a Canadian legal accounting and practice management software. In no means or manner are we looking to promote the product in today's webinar. Today's webinar is all about the concept of getting across what trust and general reconciliation means, and we're just using uLaw as a way of demonstrating it. Any legal accounting software hopefully should provide you with that same level of convenience. And before I jump into kind of really what that reconciliation process looks like, let's quickly set some context again in terms of the different accounting systems that you need to keep in mind as defined by the Law Society. So you start with your manual double entry system, just one of the simplest ways of actually doing accounting, but one of the most tedious ways that you can do it, because you, at the end of the day, are responsible for ensuring that the ledgers and subledgers are posted appropriately. So it's simple, yet exhaustive, and it takes a lot of time. Then you had right from the OneWrite system to the most common spreadsheet solutions that a lot of legal professionals have, where you manage your revenue, all your account balances on an Excel sheet. Then we've evolved to a point where legal professionals started using general accounting software, which has its advantages. It does a lot of the calculations for you, but it certainly does not manage the trust accounting aspects to it. and then evolved the legal accounting software, which was purpose-built for legal professionals and allows you to manage both trust and general accounts in a very compliant and convenient manner. And legal accounting software has been in existence for a while, but hasn't necessarily been in existence in a cloud premise, and hence has been a bit of an expensive investment, if you will, for professionals. But in today's context, in the 21st, 22nd century context, companies like uLaw are making that legal accounting software not only as effective and competitive in nature with the legal accounting software that you're used to, but with the advent of technology, we're making it very cost-effective as well and mobile-friendly, so that you, as today's legal professional, can take advantages of all those advancements in what technology has to provide you. Okay, so that's really the growth of the accounting softwares that are available still. You can still do this manually yourself. Obviously, you got to take into consideration all the advantages and disadvantages of these different systems. And with time being spread thin across multiple things that you have to do as a legal professional, it's better money spent, better time spent in letting a software deal with a lot of those nuances for you, especially when it's cost effective. Yeah. So what is the reconciliation of trust, and why should you do it, and what does it take? What are the steps that govern that reconciliation process? Okay. The reconciliation process is an accounting procedure that demonstrates that your records between what the bank records say and your bookkeeping records say match. Okay, and they are correct. And fundamentally, we've kind of broken it down into 4 different steps that this trust reconciliation report that you need to present. We've kind of boiled it down to those 4 different steps or components. Okay. Step 1, obviously, is the recording of the bank statement and balance. So you're trying to marry what's really happened in the bank, whatever bank that you work with, what's really happened in real life, that is, and recording of the outstanding checks and deposits and any banks, if any, bank errors, if any. So if there are any outstanding checks or deposits, meaning if there's money that you're holding as checks, or if there are certain deposits that you still has not reflected in the bank, right? So we want to take a quick note of what those are. So that's really step 2. Step 3 is a recording of your client's trust listing. So let's say you have a $100 trust balance. You really want to understand why that $100. Let's say there's 6 clients. You want to spread that $100 across those 6 clients and list them, right? So that's really what's adding up to that $100. And last but not the least, a comparison chart. So a real quick comparison of your reconciled bank balance with your unexpended balances as per your trust ledger of your bookkeeping software. Okay, and at the end of the day, these 2 numbers would have to match so that you can do your reconciliation. And it's as simple as that. What we're going to cover in the next 30 to 40 minutes is how can you actually make this whole process simple? What components do you need to keep in mind? What components you can let the softwares and the processes that are inbuilt into these legal accounting softwares do for you. Okay. Same thing applies to the reconciliation of your general accounts. It's very similar to that of the trust accounting, in that it's an accounting procedure that again marries your general account, bank account, with the bookkeeping of your general accounts in your bookkeeping software. Well, the one difference is that there are 3 steps predominantly or fundamentally, 1 step lesser than the trust accounting, and that is the first step 1 still being the recording of your bank statement balances, right? Same as the trust. Recording of the outstanding checks and deposits, step number 2. The third step is obviously the comparison that you had with the trust, but in this case it's between the bank account and your ledger, the bookkeeping software. So the only thing that's missing is really is, if you really look at back to back, is step 3, which is the recording of your client's trust listing. Okay, so 4 steps in your trust reconciliation. 3 steps in your gender reconciliation and the components of this reconciliation statements. Now, what we've tried to accomplish, and again, as I said, legal accounting software gives you this flexibility. One of the core components of how you would go about reconciling, and we'll get into it in a little bit, in a bit more detail. But fundamentally, what you want to marry is the date of the reconciliation. So the Law Society, it's not mandating you to do it, but it's a great policy or a bit of a thumb rule, if you were, to have a reconciliation done at the end of every month, especially if you can do it on the 28th. We've seen a lot of our legal friends do that. About the 28th of the end of the month, there's a reconciliation that's done for all the records till that date. The first is obviously the date that you're reconciling. Okay. Second, obviously, is quickly understanding your balance as per your bank. So log into your bank account, and as on that 28th, so let's say we're doing this reconciliation for the month of November, on the 28th of November 2017, then you're going to look at your bank balance as of 28th November 2017. And you're going to look at any deposits, you're going to look at each and every transaction that's happened in that month of November. Let's first look at the trust account. So you're going to have your real, TD, RBC, CIBC, etc. online bank statement for that month, let's say for trust. You're going to look at each and every transaction, the deposits and withdrawals from that account. So a deposit in a trust account could be a retainer. Withdrawal obviously would be, as an invoice, the invoice balance that you're moving from retainer to general. Okay, eligible trust transfer, if you will. And then you're comparing with the date that has actually reflected your bank with what you've actually said in the bookkeeping software. That's very important, that you're kind of marrying the two dates. And if there are any bank errors that the bookkeeping software may or may not know, then you're accounting for if there are any bank errors. So sometimes banks make the error either positive or negative. So either they remove a service fee off your trust account, which if you can catch early, it's a great thing that if you can catch it earlier in the month, you can always go back to the bank, talk to them, and ensure that money is put back into the account. So if they've withdrawn $6 from your bank as a service fee on the 14th of November, keep a tab on it, call them on the 18th, make sure that before end of that month, they help you to put that money back in. The other way is, if there's an interest that they have actually deposited into your trust account, that's not allowed either. So that's a positive bank error, right? As much as it's great that they've actually put money into your trust account, that's obviously not allowed, not compliant, it's frowned upon. So you have to keep a tab on your trust account, especially for these bank errors, okay? And once you've done these little steps, then it's just a matter of clicking these boxes and getting going with your reconciliation. Because now you've looked at the date, you looked at all the transactions, you've handled the bank errors, and if there is an error exactly on the 28th that you couldn't handle, then you report it, right? You just report it as a bank error, and that's all that matters to do your reconciliation. Now, the real question is, what's all this fuss about? Why do I have to do reconciliation? The number one step, obviously, is it's Law Society compliant, especially for a trust reconciliation, because they want to make sure that you as a legal professional are well versed in how you handle trust money. You're not misappropriating trust money. We've very recently heard of a lot of serious issues where legal professionals have actually been suspended or even dismissed for having misappropriated trust money. And legal action are actually being taken against them for actually doing so. So for one, Law Society is looking to have a good tab, ensuring that all their legal professionals, everybody in their society and part of this illustrious group are doing all the right things so that they're compliant and they know how to manage trust money, right? So that's number one. It's fundamental. But what we believe at uLaw is beyond the compliance, beyond someone waiting to catch you on the wrong foot, reconciliation is a great process for you to know more about your business. Okay? It's one of those steps that is fundamentally designed to proactively allow you to manage your numbers of your business, both trust and general. Okay? And how do you do that? Is through these two steps. So you're trying to marry what's happened in the bank with what you know within the bookkeeping software. Okay? So it catches all the transactions between your accounting system, which I refer to the bookkeeping, and your actual bank. And the second aspect to it is, if there are transactions that are reflected at the bank that your accounting software does not know, okay, then you just want to bring them up to speed. You want to ensure that you've caught up on what those differences in those transactions are. And last but not the least, if you have reconciled your accounts on a month-on-month basis, here's a list of things that it means to your business. Okay? Number one, it means that your accounting system, your bookkeeping software, your accounting system is up to date. Okay? If you reconcile up to the 28th of November, then all you have to worry about is the month of December. You're audit ready at any given time because you've done all the right things, you've reconciled, the numbers match, and once it becomes part of your DNA of how you go about your life, and it's just one of those things that you do every Friday, and again, you don't have to do reconciliation just once a month. You are able to now do it every day, if not every week. So staying as close as possible to those numbers, very important. You can be ready for filing taxes with CRA as well. So if you look at your general reconciliation, a big part of that is ensuring what your business revenue and your expenses are. So if you've reconciled your revenue and expense, then you pretty much know what your taxes are. Now, if you've started to generate ledgers, like a big part of your compliance could be your trust ledgers, your journals, reconciling on a monthly basis improves the accuracy of the numbers that you reflect on those ledgers, because you've really told your bookkeeping software exactly what's happened between the bank and the bookkeeping software. So the numbers in the bookkeeping software are going to be that much more prudent. And hence the reporting on those reports, the ledgers and journals, which are a very important part of your compliance responsibility, are now going to be up to date, and all those numbers are going to be intact. And then last but not the least, you have peace of mind. It's not one of those quicksand situation where you're always reacting to a situation. So you've just been audited and someone said you're not doing well. Now you have to scamper to get your books in record. So instead of reacting, by building a process by design as part of your legal DNA, you're now going to establish that peace of mind of knowing where your numbers are, and if it's just a matter of facing your fear, take advantage of software that can actually do it for you. Okay? So the question is, if I've completed the reconciliation, am I audit ready? And what is really an audit? What are the different documents that the Law Society is looking to do? Financial management is a big component of your audit, right? So they're looking at client management, they're looking at your matter file management, they're looking at various other components that we cover as part of one of our CPDs, which is the everything practice management. But the financial management is a very key component of it, especially trust. It's being looked upon with full sincerity by all auditors, right? So the quick answer is, if you have actually done your reconciliation, you are audit ready. Okay? Because once you've done your reconciliation, then everything else is just a matter of generating reports. So if you really look at your checklist, you've got your trust ledger, your trust journals, both for trust receipts as well as payments. Likewise, you've got your general ledger, and you've got your general receipts and payments, and your disbursements. Okay? And you're just ready to actually almost as easy as download them, but that's purely in the case of uLaw. So I apologize for having brought that term in. But once you've reconciled any situation, any software, you should be able to be very confident about those ledgers. Okay? So before I jump into the actual demonstration of the product, let's just, last but not the least, look at a quick checklist. So we've kind of broken down your overall checklist into kind of 3 components. You've got your invoice balance, or let's start with the fee structure and handling retainer. So we've got that, it's really where it starts. You've got your fee structure, you've got your invoice balance, and you've got the handling of the trust account and all the documents that go with your checklist. Okay? So if I were to go through them real quick before I can jump into a demonstration, so what does the fee structure and handling retainer checklist look like? Ensure that you're capturing, a proper fee structure in your retainer, telling your client exactly how much of retainer you're going to be asking for, how are you going to withdraw it, the frequency of your invoices, all the good stuff. If you're dealing with flat fees or contingency fees, illustrate or outline in a retainer letter as to how you would go about asking for, or how you'd go about docketing your matter. Okay? Be clear about your disbursement policy. Are you going to be withdrawing money for disbursements right off your trust, or are you going to be doing it out of general and then invoicing the client and then moving money from trust to general? These are very important things that if you can outline in your retainer document, it not only gives you the clarity that you need about your business, it also gives a lot of confidence to your client, who's now confident about working with a very confident and an established legal professional who knows exactly what he or she is doing, right? So, docket on time, disperse on time, invoice on time, because that's a big part of what you should be doing, a big part of a legal life beyond what you do at the courtroom is actually being able to do this, right? So docket, disperse, capture the moment when it happens, and invoice on time. So you're not sending one surprise invoice to your client at the end of the 3rd month. Get them in the habit of receiving invoices, and if there's retainer involved and you're drawing, hundreds of dollars out of that retainer, let them know through that invoice. It's paid, it's been taken care of. I'm just letting you know I'm going to be moving that $100 disbursement from that $500 retainer. Okay, so establish a fee structure and how you handle retainers, disperse, docket, and raise invoices in a timely manner. And for you as a business, ensure you're on top of your invoice balances. The last thing you want to do is have a retainer in real life and forget to actually move money from your trust account to general account. We see that quite often with some of our clients. Because they're busy individuals, these are things that are skipping their mind till there's no money in the general account, and they're like, where did all that money go? It's still sitting in my trust, right? So make sure that once you've raised an invoice, you're constantly checking for any outstanding trust amount that you can move, right? Eligible trust account, as well as any payments that you should receive. So if let's say there's no trust involved, you just raised an invoice for $500 and you're waiting for that $500 payment, and now it's past due the 15 or 30 days of payment terms. Generate the reports, have those dashboards available so that you or your colleague, your assistant can follow up with those clients and accept those payments. Because the more you delay those acceptance of payments, the more that's going to start to hinder in your reconciliation process, right? Because if you've not reconciled or if you've not accepted a payment in June and you're going to catch up today, well, then there's a bit of catch up to do with your reconciliation. If you can capture everything as it happens within that time period, within that month, as much as you can. There are certain things that you can't. There are certain things that are in your control to make it happen. So keeping a tab on the invoice balance, general, right? And last but not the least, once you've done these 2 big building blocks, you reconcile, generate all your ledgers and journals, Okay, so manage a trust ledger, receipts and disbursements, maintaining a monthly trust comparisons or reconciliation for both trust and general. And if you are in the habit, being the, with the advent of technology, with electronic bank being a big thing, if you are going to be transferring money from trust to general, then in Ontario, for our other jurisdictional friends, not there yet, but in Ontario, you do have to fill the Form 9A. So you have to, for every transaction that involves trust to general, you're going to be doing that. And the same thing applies to your general account. Manage and maintain that ledger, receipts, disbursements. And it's important that you also manage your fee book, your expense book, and any discounts and write-offs that you may have, because those are considered as part of your revenue and expense, right? So when you compare your revenue and your expense, that's going to give you your profit and loss. When you kind of match these two together, and that is what you're going to require as a business at the end of the month, end of the year. Okay, and once you have your revenue, depending on your situation, whether you're a business or a sole proprietor or incorporation, then you're filing your taxes. So as hard as it may seem, and there's obviously a lot of touch points, there's a lot of building blocks, but these are the core building blocks for a legal professional. Just be aware of them so that you can always be confident depending on where you are in that cycle. Okay? Now the quick conduit, or just a segue into our demonstration, is now you looked at the building blocks, you know what needs to be done, but the real question is, how fast can you accomplish this? Or how much time should you be actually taking, or can you save in accomplishing these tasks? And the quick answer is, as I mentioned earlier, you can actually do this in a very manual way. Accounting has been in existence for a very long time, and the rules of accounting have been established way back. As the Law Society does give you the options, you do have the option of a manual double entry, you have the option, but what you need to do, the research, is how can I minimize or maximize the time that available and minimize the amount of manual effort that I need to put in managing these records. Because these are repetitive, right? So the rules are not changing for every month. The reports and documents that you need to generate are the same. The numbers and the data are the ones that are changing on a month-to-month basis. Okay? So if you can do your research, find the right tool that serves you well, gives you that convenience as well as compliance factors associated with it, and I strongly recommend that you do your research and start to use those tools so that you can save that time to put back to your work or to your family or otherwise, right? But regardless of what system that you use, it's very important to understand what makes that reconciliation process simple. And number one thing is always what we preach in uLaw, is recording the data as and when it happens, capturing that moment. So really, beyond capturing the moment on your camera, you're capturing your legal moment, your trust, general accounting touch points as and when it happens. If you have that expense, and if you've just done that, take a photocopy of it, ensure that you put it into your bookkeeping software or your accounting software right away, same day if possible. Okay? As I said, if you have docketed that client, and if you have to raise that invoice, see if you can do it right away. If you've done that and there's trust money involved to be moved, be vigilant. Move that money right away from trust to general. Report it back as part of your trust reconciliation exactly that month. There is a bit of a discipline that needs to be built, but it's not hard. And that discipline is all that requires for you to be audit ready at any time. Okay? And what are the advantages? Again, as much as we highlight what the core components are, A critical core component is also saving you time. So why really bother between those different options that you have? Why bother with the legal accounting software? Well, here are the reasons why you should. Okay, one, the accounting software also has a practice management component that allows you to capture the moment as and when it happens. So you're not writing it down in a yellow sheet and going back to your desktop to fill it in. You can actually do it either from your mobile phone, you can do it from your laptop, you can do it from an internet-connected device. Gives you that convenience of recording things as and when it happens. It allows you to align, the statements, whether it's a one-on-one direct API transaction with your bank. Certain softwares do that. Certain softwares allow you to upload the monthly statements into their software, making the reconciliation simpler, so you don't have to enter all those transactions in a manual way. And keeping in mind the convenience, cost, ease of use, accountability, and most importantly, the compliance that comes with it. And the peace of mind that the dollars that you paid for can give you. Okay? Now before I jump ship to kind of walk you through this process, how simple it can be, we are recording this webinar and will be available to you early next week. So here's a quick snapshot of the different documents that are really good for you to look at. It's not just for reading pleasure, especially your audit checklist and your bookkeeping guidelines are two documents that I think you should be thorough, have a good understanding about, as I said, so that you can be very confident about your craft, not just as a legal professional at court, but also as a legal professional who is a business owner and can do all the right things to be compliant. Because if you can stay compliant, you can stay in court, right? A quick note from the sponsors. We are we're proudly Canadian legal accounting and practice management software. For those who know us, we welcome you to continue using the product or give us a try. For those who don't know us, kindly request you to give us a try. Go to our website. We have a free 30-day trial, no obligations, and we do offer free onboarding sessions as well. Okay? Alrighty. So let me now shift gears. And again, please do have your questions through our chat window. I believe we've also shared the audit checklist presentation on our chat window right now, so you can actually click on it and download it. And please do provide your feedback using our Google Forms, so that we as a vendor can be better at presenting these webinars and come up with new topics that would be of meaningful use to you. Okay? And please do ask questions, because that's a great way of collaborating and learning. Okay. So I'm logged into what I call as a playground account with the uLaw. I'm using a fictitious lawyer, Roger Moore, as the lawyer who's using this software. Again, it's no means of demonstrating the product itself. It's just a matter of using it to demonstrate the concept. Okay? So I'm going to take an example of a recent client, Mary Smith, that I just created. I'm actually going to create a matter. I'm actually going to, let me create a new contact, because I've already invoiced this client. So really quick, let me go ahead and create a client. So I'm going to provide a mailing address real quick. I'm not going to bother about anything else. I'm just going to go ahead, save in matter, so that I can create a file. So I'm just kind of going to walk you through those three checklists we looked at. So let's say you've got this client, you've done the client intake. Okay, I'm not really bothered with that because I want to jump into the reconciliation process. But once you've created the client, you can actually go ahead do a conflict screening, ensure that you can represent him or her, go about generating a client. So let's say this is a more simple example of a small claims. Okay. Just created a file to ensure that, again, part of your compliance is ensuring proper file management, something that's easy to search, etc. You're going to obviously generate from that checklist, if you were to look at it, generate all those appropriate documents as part of the file management. Okay, right from your client ID verification, ensuring that you've got their driver's license or passport, whatever it is, to ensure that it is them that you're talking about. Have a very detailed, well thought out retainer letter. Okay, so and let's assume you've signed that retainer letter. It's a $500 retainer that you've just accepted. And what I'm going to do is, for the purposes of the demo, I'm going to accept it for earlier this week. I'll backtrack this. Let me accept beginning of this week a $500 retainer. I'm going to put it as a check, give them a receipt, and deposit that into my trust account. Okay? So let's assume that this was on the 4th of December, that the client, Jamie Fox, gave me a $500 retainer using his check. I'm going to provide him the retainer letter, the signed retainer letter, the signed receipt for having paid me. Very important that you manage those payment receipts for both your retainers as well as general payments. Yeah. And let's say you go about doing your docket. There's different styles of dockets. I'm just going to keep this fairly simple. I'm going to say final closure after the work's done. I'm going to say I spent overall about 5 hours doing this work. I'm going to charge him $500. Okay. Always a great habit to explain what has been accomplished and for what you're asking that money for. Okay. I'm going to go ahead and docket this $500 flat rate. So it's going to be $500 plus tax, or you can actually ignore the tax by making that tax zero. In this case, I'm just going to go ahead and do that. Okay. So now that you've docketed the time, the big on time, the next step really is to go ahead and raise that invoice on a timely manner. Okay. So you're going to go ahead real quick, generate a pre-bill. Great habit to make sure that you're totally happy with the invoice. Once you're happy with that pre-bill, go ahead and raise that invoice. So you're basically raising it today. You could always backdate that if you like, depending on your situation. All right, so once you raise that invoice, and we looked at the invoice balance as a quick checklist, yeah? So you know, for this particular matter, for Jamie Fox, there's a pending trust transfer of an eligible $500 that you had in your trust account, that you put into your trust account. Once you raise that invoice, that was for $565, you have the $500 that you can accept for that trust. So you're going to go do exactly that. So tell your accounting software, obviously do it in real life. In real life, you're going to transfer that money, and you're going to tell your accounting software that you've actually done that. And to stay compliant, though the invoice was for an amount of $565, you're only allowed to transfer $500, right? You're going to go ahead, move that money from your trust account into your general account. Okay, and let's say you do it through a check. If you do it through an electronic fund transfer, then you fill a Form 9A. Let's go ahead and move that money of $500. Last but not least, let's just accept that payment as well. So here's that $65 that's still pending, and it came in as a check. Deposit into your general account, give them a receipt, and you're done, right? So you've done all the right things for Mr. Jamie Foxx. You docketed on time, you accepted the retainer, you kind of done all the due diligence to establish what that retainer should look like, what you're going to be accomplishing for your work. You've cleanly mentioned the work that has been done in working on the slip and fall issue. You've done the right thing of raising the invoices. There was one invoice that you raised, and you've done the right thing of moving trust money, the pending trust transfer from trust to general. You've also accepted the payment of $65, so you've done very well for your own business. You've got money in the bank. Fantastic. You go ahead, mark this matter closed, done. Right? So this is how you would go about creating matters and doing all of that. And once the dust settles and all this is done, fine and dandy, you're obviously going into your reconciliation and all of the law society financial set of documents that you need to generate, right? So if you look at our compliance panel, this pretty much gives you a checklist of every possible law society audit document that you require. But we'll all start where it's begun, which is the reconciliation. So you do your trust reconciliation, and it's fairly simple. You're going to be entering the date of your reconciliation. Okay? What was the bank balance on that specific date, the real bank balance. You're going to start to compare your online bank as well as the bookkeeping software's transactions, especially the date. Look for any bank errors, and these numbers reconcile. You generate the reconciliation report. Okay? So now you're probably familiar with that transaction that we had for Jamie Foxx. So I'm actually going to reconcile for December because I believe I've already done it all for November. So if I were to go on November, there are no transactions. So I'm up to date with all my reconciliations, all that's pending, and this is as far as I can go, right? So I already had the Philly Fillmore, which was a retainer that I received for one of our clients. And all you're going to look to do is you're going to fill in your balance per bank statement because you're going to log in into your TD account or TVC account, right? You're going to look at the balance as of December 8th. Okay? Going to put the date, put the balance. I think I've got the number wrong. That's a lot of big numbers. Now I'm going to look at my bank account. I'm going to just assume, I'm going to paint the picture. So dream with me here. So assuming I have another TD online bank account opened, my trust account for the month of December, ending December 8th, which is today. And what I'm going to do, I'm going to first look for this particular date, the retainer for Mr. Billy Fillmore that I received. Or let's do it for Jamie Foxx. You know that we received that check, that we deposited into our trust account. The one important thing you want to capture now is we know that we received the check on the 4th, but it would actually reflect in your bank on the 4th. Many times it takes a couple of days before a check can clear at a bank. So realistically, let's assume that it was only on the 7th that this managed. Okay? Then we're going to look at the retainer that we received from Mr. Fillmore. Let's say that reflected for whatever reason today. And last but not the least, if you look, that was just that one withdrawal for Jamie Foxx. You raised that invoice and you moved that money from your trust account into your general account. Okay, so maybe that both happened on the same day. So these dates match. These two dates were different. Okay? And that's all you've done. And you've given us what your balance per bank statement is. Now, the only anomaly in this case is if there was a bank error that your bookkeeping software didn't know that you needed to report. So let's say, for whatever reason, that was $1.27. Then obviously your bank balance would change, right? So obviously your balance per bank statement would change because of that error. Overall, math, it's going to all equate, and you're going to generate that reconciliation report. And if you look at the core components that we looked at, what are the core components of a trust reconciliation report? Step 1, you're looking at your bank statement. Step 2, you're looking at the outstanding checks and deposits, any bank errors, if any, very important, recording your trust listing, and your trust comparison. Perfect. So we're looking at step 1, was the closing balance bank statement. Any outstanding withdrawals or payments? None. That was a bank error of $1.27. Okay, it was a positive. I just made it up, but most importantly, step 3, which was not available to you in your general, was your client listing. Here are all the clients whose trust balance as of a certain date added up to this amount. If you really look at it, this is just a summary, and these are all details that go behind how did I have $242,000 of trust balance in my trust account. It's because all these different clients, again, this is a playground account, so people have gone crazy with it. But in all honesty, it's because all of these trust balances have added up over time. And it's important that you list them. And this truly is what the trust listing is about. Okay? And we've gone one step further to give you also the cleared and reconciled transactions. Right? And that's all there is. So this is truly what your trust reconciliation looks like. And another thing that we highlight is, for example, if you look at this particular line item, Ryan, now he's had a bank balance since 2015. This is 2 years or older. I believe it's 2.5 years older. You can set that number. This would be in red. What that really means is you want to talk to Ryan and really find out, how do we close this? How do we invoice him and move that money and get that payment? Or if he's not really interested in moving forward, at least give him back that money, right? Refund that retainer so you're not holding on to an amount for so long. So that's how we've gone through that whole trust reconciliation process. Now, if I were to generate my trust ledger, and if I were to do it for the month of December, as I mentioned, I'll be very confident about these numbers because I've reconciled my bookkeeping software with my bank. So here is the date, the retainer from Mr. Philly Fillmore, right? And here's Jamie Fox, the only 2 clients that I have for this month. The retainer that I received, and the money that I moved from trust to general. So that's as simple as it gets if I were to do my trust receipt for the month of December. But these are all part of your Law Society compliance for your audit, right? So you've done your reconciliation, now you're just generating all the reports that are required. So what's the big difference between the ledger and the journal? You're looking for the purpose, okay? You're looking for purpose, obviously, including the file number and the method. So you receive that $500 from Philly through a check number 21, and you deposit it in your trust account on the 4th. Likewise for Jamie, for that matter, you got a $500 check number 4566. Very detailed, right? Last but not the least, what were the trust payments for that month? So we've looked at the ledger, one of the journals, and here's the other journal, which is the payments. How did you pay yourself? It was through that trust transfer because of that invoice 2755. You can always backtrack it, you know, for confidently why that money is there, or why that money is moved, sorry. Okay? And that's pretty much it from a trust reconciliation process. It's as simple as that, and you have to believe it. It's as simple as that. Same thing applies for your gender reconciliation. So let's look at, you can reconcile many accounts. As you can see, you can reconcile your general account, you can reconcile your credit card, and if you have multiple general accounts, you can do that as well. And it goes through the same process. Okay, you're going to reconcile your general account, you're going to compare between what the bank says and what your bookkeeping software says. And I can be confident that I have not reconciled this in a long time, and that's where you're getting this huge statement, right? So you're going to go ahead and reconcile this by date. You can sort this by date, ascending, descending. Okay. If you look at the most recent one, was the client payment or the trust transfer that happened, where you deposited that $500 from the trust account, and you also got that $65 payment from Mr. Jamie Fox, and that was a $65 deposit. If I were to just keep it to my December records, I'm just going to say, go ahead, reconcile. Okay? And that's how I go about doing that. Once I've reconciled my general account, I can feel confident about generating my general ledger, just like how I did it for trust. My general ledger, my general receipt, and the disbursements. Okay? So going back to what we were looking to accomplish to begin with, was kind of having a quick look at what these reconciliation reports look like, what are all the audit-proof ready documents look like, and how simple you can accomplish that. And fundamentally, what are things that you need to keep in mind as you plan your legal practice and design from the get-go of staying compliant. Okay? So we created a client, just going through the motion of doing a practice management. You created the client, accepted a retainer, invoiced on time, sent that invoice to the client electronically, moved the money from trust to general, got yourself paid for the extra $65 that he owed you, and you generated all the documents that are necessary, starting with your trust reconciliation for the month of December, and you generated the ledger for the trust, the trust journal, and your payment journal. Okay? All available to you in the compliance panel, or you can generate them individually. For obviously, there are other documents that can be generated as well, such as your fee book. You could generate your monthly fee book for the month of December. Okay? And any expense books as well. Obviously, we did not reflect any expenses as part of today's demonstration, but if you were to put in an expense as part of your business, you'd reflect that as well. Okay? So we believe beyond it being a monologue of us talking to you and demonstrating these capabilities and walking you through the process, the great learning. I'm sorry we could only spend another 5 or 6 minutes in the Q&A, but I would sincerely appreciate it if you could ask your questions through the chat window, which I would then be able to read. And I'd like this to be as collaborative as possible. And again, play this again at your leisure or next weekend. Review it, look at it, understand what the core components are, and just lead a very compliant, peace of mind, happy legal life. Okay? So I would encourage you to ask us any questions regarding this presentation today about the subject area, and we'll be more than happy to respond. Thank you.